Welcome back. You're tuned into Market Fatafat with me, Ankita Saxena, and with me, Shrishti Sharma. And we are giving you all the stocks that are buzzing away in trade. On technicals now, we are joined by Chandan Taparia, derivatives and technical analyst from Motilal Oswal. And of course, we have a team of researchers. We have Snehi and Janai on the show. But let's get started with some more stocks then. Jindal Steel is another counter that is buzzing away in trade. In fact, the whole metal pack is shining away in trade, Shrishti. Jindal Steel, of course, has posted a great set of numbers. They have posted a reported consolidated net profit of 933 crore rupees for the fourth quarter, registering a gain of 100% compared to last year as the company benefited from a robust domestic demand environment. Now, Jindal Steel had posted a consolidated net profit of 466 crores in the quarter four of previous year on a year-on-year basis. The company's consolidated gross revenue in January-March quarter remained flat at 15,000 crores. On a sequential basis, the revenue rose 15%, while the profit fell 52% from 1,900 crores. Also, Jindal Steel's consolidated net debt stood at 11,200 crores as of March versus 9,115 crores as at December 31st, 2023. Now, this increase in debt, reflects higher payments on account of completion of several projects in line with the capex program. That's what the management of the company came out and said. Good set of results, all in all, is powering Jindal Steel in trade today. It's trading with gains of more than 5%.
Well, yes, good set of earnings, but somewhat expected in the markets. But what a day to be, because the whole metal pack is shining bright. So, as they say, no bad news is also good news. And Chandan, what we are seeing on stock of Jindal Steel, is that stock ready to cross that 1,000 mark now?
Yeah, we have seen a positive price pattern in most of the metal stocks, and Nifty Metal itself is up by around 3% for the day and heading towards the new lifetime high. We have seen a tremendous move in most of the metal counter, and Jindal Steel is one of the strongest setup. Technically speaking, it has been making higher tops, higher bottom on the weekly and the monthly scale, and it has given a consolidation breakout on the daily chart above 950 zone. So because of that, this momentum could continue. Derivatives front, we have seen built up of long positions along with put writing and call unwinding. We have seen surge in the volume, so all the data internal indicates fresh leg of rally in the counter. So one can continue to hold the long position or can add the long position with support of 958, and we are expecting a run up towards 1,020, 1,040 in the Jindal Steel.
Right, that's about Jindal Steel, but let's shift focus to Zydus Wellness then, because just a while back we have got the numbers, so just highlighting those in the stock action. If you will see, the stock is holding on to the gains of over 2%. The sharp spike that you are seeing intraday was on the back of the earnings, where the profit of the company has grown by 3.4% on a YY basis, which is the top line that has done well, and along with the operational performance of the company. Revenue saw a jump of over 10% YY, while the margins have seen an improvement from 20.4% a year back to 21.1% this time around. So there's an improvement, and the EBITDA has also seen a jump of 14.5%. So all in all, good set of numbers coming in from Zydus Wellness, and that's why we are seeing the stock is holding on to the strong gains of more than 2% right now.
All right, moving on to the other stock that is in focus, and that is Zomato. Now, Zomato came out with its numbers, which was largely in line, but the share fell 6% in the morning trade, on the back of the ESOP, headache. But the target prices by a lot of brokerage firms have been raised, and, a couple of bullish notes also from the brokerages. But first, let's look at the numbers for Zomato. Largely in line set of numbers. The quick commerce commentary has been positive. The food delivery growth has been rather subdued on a sequential basis. Zomato posted a net profit of 175 crores for the quarter, marking the fourth straight quarter of profitability for the company. And also, the revenue rose 73% on a year-on-year basis to 3,500 crores at a time when the broader e-commerce sector is reeling under pressure of high inflation and muted demand. And the quick commerce EBIT, came in at 200 crores, came in at 2 crores versus EBIT loss of 56 crores. So they've also turned EBIT positive in this quarter, and the Hyper's loss also reduced meaningfully in the month of March. Quick commerce business Blinkit Blinkit also turned adjusted EBITDA positive in the March quarter, and the overall adjusted EBITDA in the business is likely to hover around zero for the next few quarters, is what the company is saying, and they expect a 4 to 5% adjusted EBITDA margin going ahead. Also, Jefferies came out with a note, and they are maintaining a buy on the counter. They've hiked the target price to 230 rupees per share. Avendus Spark, however, has downgraded the stock to add from buy and hike the target price to 210 rupees. UBS is also maintaining a buy with a target price of 250 rupees per share. That's the word coming in for Zomato.
Alright, that's about Zomato, but just before we move ahead, just to flag the market movement right now, because the markets are at a day's highest point now. 163 points of gain coming in for Nifty 50, and if you look at the internals, then Reliance is at the day's highest point and giving all of the strength to the markets right now, and especially the index. Along with Reliance, L&T is also seen to be flying high, and other than that, HDFC Bank from the banking pack is also starting to get that momentum. So all these large cap and the heavyweights are seeing good gains in today's trading session. So just wanted to mark the markets then. Nifty Bank is yet to catch the up move. But moving on then, and Chandan, let's talk about your next stock, and that is one of another metal counters, and that is JSW Steel. Talk to us, how is this looking on the charts then?
Yeah, so we have seen good set of movement in most of the metal name. As I mentioned, that Nifty metal itself is up by around 3%. Jindal still has seen a good momentum, and now JSW is also finding the positive placement. Technically speaking, it started to form higher top, higher bottom. So expecting fresh run up. One can buy with support of 865. Overall, we are expecting a run up towards 925.
Alright, coming to you, Snehi, you've picked out Easy Trip for us. This one's trading with gains of 2%. Tell us, what is the news flow that's powering the stock?
Well, Ankita, positive news flow coming in for this company, because Easy Trip, in collaboration with the Small Industries Development Bank of India, which is popularly known as SIDB, and the Uttarakhand Tourism Development Board, which is UTDB, they've announced the launch of a homestay entrepreneurship training program aimed at empowering homestay owners along the sacred Chardham Yatra route. Now, the Chardham Yatra route is very much in focus right now, because this is the time of the year that pilgrims and travelers, they often visit this pilgrimage site as well. Now, this innovative training program, initiated in April and extended throughout May, aims to enhance the capabilities of 150 homestay owners by equipping them with essential skills in hospitality and eco-friendly practices. So, Easy Trip, along with both of these companies, SIDBI as well as the Uttarakhand Tourism Board, will be teaching and training these homestay owners to be able to rent out their properties to all of these tourists and pilgrims that are visiting the Chardham Yatra as of now. And on the back of this positive news flow and this collaboration, the stock is up 2.5% as we speak.
Alright, that's about Easy Trip. But Jinay, let's talk about Thermax then. Take us through what's the news flow out here and what's the stock movement that we are tracking today.
Right, so Jefferies have came up with a brokerage report maintaining their buy rating, and they've given the target price. They've hiked the target price to rupees 5,480 from rupees 4,445. They believe that they have a belief that the company will be having a double-digit FY25 revenue growth, and the key thing here to watch out will be the conversion of the pipeline to the order book in H1 of FY2025. They believe that operating leverage will be further supporting the margin expansions from financial year 2024 to 2027. The valuation should remain supported by earning tractions, and the markets clearly seems reacting positively to this report. The stock is right now trading over 2%, but was earlier was trading earlier 5% higher intraday.
All right, that was Thermax for you. Another stock that is an earnings candidate is DLF. DLF is in focus today in the back of its Q4 earnings. The company has reported a 62% increase in the consolidated net profit of 920 crore rupees in the quarter on higher income amid strong housing sales. Its net profit stood at around 570 crore rupees on a year-on-year basis. Now, the realty major further announced a dividend of 5 rupees per equity share of the face value of 2 each for FY 23-24, subjected to approval from the stake shareholders. And it has also announced the appointment of Ashok Kumar Tyagi as the managing director of the company after the consequent resignation by Vivekanand, which was effective from 29th of February 2024. So that's the news flow right now. In fact, the stock is trading rather flat with marginal gains of 0.01%, but that's the result coming in for DLF.
Okay, that's about DLF. But moving on, and Chandan, another stock that you're tracking is NMDC. We are seeing all this PSU pack doing pretty well. And talk to us about how you're looking at the charts of NMDC.
Yeah, so if I look at the NMDC, the stock has seen the recovery of more than 4 to 5% from lower levels after the consolidating move of the last week. Major trend is positive, and the recent decline again attracts the fresh buying opportunity in terms of risk reward ratio. So looking for fresh up move in the counter. Entire sector is doing well, so one can buy with support of 257. Overall, we are expecting a run up towards 280.
All right, coming to you, Snehi. Sterlite Tech is what you've picked out for us. Tell us what's the news flow on this one.
Let's talk about Sterlite Tech because the stock is doing pretty well, up 2.7% as we speak. And Sterlite Tech has announced a strategic partnership with DO, which is from Emirates Integrated Telecommunications Company, which is the EITC. And this is one of the top telecom companies in the UAE. Now, this announcement by Sterlite Tech comes on the heels of the company going ahead and signing a new 5-year contract for its optical fiber cables with DO Telecom. As part of this contract, Sterlite will provide advanced optical cable designs with bend resistance fiber to deliver better network performance, especially in the fiber to homes network segment. So on the back of this collaboration that Sterlite Tech has done with a very popular company of the United Arab Emirates, that is DO Telecom, the stock is up 2.7% as we speak.
All right, that's about Sterlite Tech. And Junai, let's talk about Hero MotoCorp, one of the stocks that you have picked up, and all these auto packs are flying high in trade today. Tell us what's the news flow here.
That the company has joined an ONDC network. This becomes the first auto company to join this network. The company says that partnering with ONDC will further enhance the reach and convenience, providing an easy accessibility through the digital mode for the customers. The Niranjan Gupta, the CEO of the company, says that the company will be furthering the government Digital India's mission, and the company will bring in more innovation further in this space. The stock is clearly reacting positive. The stock is trading right now 3% and also has hit a new all-time high.
Absolutely. Chandan, coming to you, you have also picked out Hero Moto that has hit an all-time high. Last 6 months also good solid gains of 60% is what this counter has given. Is there more steam left in this counter? What is the upside that you're seeing?
Yes, we believe more steam is left, and major trend is. Yeah, so we are expecting further move in the stock. Selective auto stocks are doing well, especially when we talk about Hero Moto, Escorts and all. So I think one can buy the position with support of 49.50. Overall, stock can head towards 52.50 kind of level.
All right, that's about Hero MotoCorp, but let's talk about then another stock, and that is Birlasoft. Junai, take us through what's happening with this counter then.
Right, so the company has attained an AWS migration consulting competency to aid. This will further aid the customer with enhancement in performance, cost efficiency, operational excellence, and compliance. The CEO of the company says that they are pleased to attain this AWS migration consulting competence status. And this will further reaffirm company's dedication to provide the cutting-edge solution and enabling business to excel in the digital by providing the cloud-based migration. The stock is trading over 3%, clearly seems reacting positive to this news.
Right, coming to you, Chandan, you have picked out ICICI Bank for us. Is this time that the stock started giving good gains for investors? What is your target price for this?
It has bottomed out and comparatively having the lower beta in the recent market scenario. Recently, we have seen a corrective move from 1170 to 1106 kind of level, and now it has bottomed out. I'm impressed with the price behavior of the last trading session. However, today follow-up is not visible, but I believe the small decline is the buying opportunity. With support of 1100, we can target towards 1170, 1180 levels.
All right, then that's about ICICI Bank. But with this, viewers, let's move on to an ET Now exclusive where we learn from reliable sources that labour reforms will be high on agenda of the new government. Labour Ministry has asked states to finalize the rules so that implementation of new labour codes start. For more on this, let's go across to my colleague Prakash Priyadarshi.
Yes, we are learning from our sources that the Labour Ministry is gearing up for the nationwide implementation of new labour codes right after the election. We are given to understand that the Labour Ministry has asked all states to finalize the rules on these codes as soon as possible. In fact, wider consensus have emerged with the industry on some of the provisions where they had some apprehension. We also given to understand that the industry has given its consent on implementation of codes on wages, which is a major breakthrough. Along with that, industry is also agree on provisions of 50% ceiling on allowances, a very significant development coming in. However, industry still have some apprehension on some of the provisions which is related with codes on industrial relation and codes on social security. As far as the codes on industrial relation is concerned, we are given to understand that labor unions want amendment in employees threshold provisions for winding up the industry. As per, it is important to note that under codes on industrial relation, government permission is not required for closure of the industry having employees up to 300, which was 100 earlier. That means the employees threshold limit has been increased to 300 from 100, and that's a major bone of contention with the industry. But the Labour Ministry has given indication that the government would adopt middle path in order to find wider consensus. A very significant development coming in. As you are aware that these codes have already been approved by the Parliament in the year 2020, and ever since states have been framing rules, but these codes have not been implemented yet. But now Labour Ministry is planning for nationwide implementation of these codes right after the election. So far, 26 states and UTs have framed rules on occupational safety and health. 20 states on industrial code, and 30 states have framed rules on codes on wages, and 20 states on social security.
Well, thank you so much, Prakash, for getting us all those details. So, mega reform expected in the labour code, but after the elections. So that's the big exclusive that we have got for you all. But with this, let's get back to the stock-specific action then that we have been tracking and have a look at Devyani International. Quite an interesting chart today, because just after the earnings, we have seen a drift coming in on Devyani International, but with the kind of a management commentary as well as some of the new announcements, the stock's seen full recovery in intraday only. Talking about the earnings then, the profit, the company did report a loss of 7.5 crores this time around versus a profit last year. That's on the back of an exceptional loss of 42 crores, but the revenue has seen a good jump. Keeping that in view, the EBITDA has also seen a good jump of 173%, and the margins that has seen a decline from 19.8% to 16.5%. So there was an exceptional there, and the earnings were a little mixed. But talking about the management commentary, then they are also saying that the store count is now close to hitting 2,000 stores in 2024 instead of 2026. So they are running ahead of the timeline, and they've also entered into partnership with PVR Inox for operating their food courts in shopping malls. So that's indeed a positive news flow coming in from Devyani International, and hence we are seeing good recovery in intraday itself.
All right, Jinay, coming to you, UPL is the counter that you've picked out for us. Jeffries came out with a note today. Tell us what the note is saying.
Right, so though the company reported a good set of numbers beating the estimations yesterday, Jeffries believe that the headwinds will persist further. Jeffries have maintained their buy but have cut the target price to rupees 610, which was earlier rupees 635. They believe that the company has beaten their net profit for Q4, but if you look at the FY 2024 overall, the company seems to miss the overall targets. They expect the industry headwinds to continue persist further in FY 2025, and this is why they have cut the estimations for FY 26 net profit by 8%, and they have taken a sharper cuts in FY 2025 estimations. They believe that the company will be reporting an profit before tax losses for the Q1 of FY 2025, and if you look at the stock, the stock is trading down about 5% in today's trading session.
All right, thank you so much, Junay, for highlighting what's happening with UPL. But with this, it's time's up in this edition of Market Fatafat. Thank you so much, Junay, Snehi, as well as Chandan and Osho earlier for joining us today and highlighting all the buzzing trades as of now. But viewers, before we go, let's hear out from Mahesh Nandulkar, Head of Research and MD at Jefferies, where he's sounding bullish on some of the themes related to the capex, manufacturing and real estate. So let's go across and listen into his rationale.
Yeah, I think the stocks have got re-rated, but what the key point that I'm making and I have been making is the our conviction on the broader capex cycle. We've clearly seen housing cycle turning around. We have seen a turnaround on the private capex cycle as well. We are in a multi-year capex upcycle. And if you look at the earnings growth, and not just the growth, but even the earnings expectations for many of these capex related stocks that have, those have been going up. Several of these capex oriented stocks are actually seeing earnings upgrades and very strong earnings growth. So we don't even need the stocks to re-rate. Even if they're able to maintain the current multiples, you can easily get a 20% plus return in many of these stocks and sectors. I think for the private banks to actually start performing in a meaningful way, we believe that there would need to be strong foreign flows, which seem to be being evasive at this point in time. And I do see the risk reward actually tilting in favor of the state-owned banks. I would say that with our expectation of a strong capex cycle, which is actually a great news for the NPLs or from the credit cost perspective. And I believe that you might actually see some positive surprises coming on the credit cost side and on the NPL side over the next not just few quarters, but actually a few years, which could be an incremental positive for state-owned banks.
Well, given the volatility that we have been seeing in the past few days on the market, what should the investors do given the volatility in the market? Should they buy into the market on a deeper correction? Well, yes, that's the word coming in from big market voices like Sandeep Tandon, Ramdev Agarwal and Hiren Ved. So let's go across and listen in to what they have to say.
My worry is more on the global market. Less India is already factored up to that extent. Its fall is happening. Maybe it can correct further. I'm not going to rule out, but the best way to play this market is through sector rotation, stock rotation. You do get such opportunity. Closer to the event, we have raised significant amount of cash level, which we have never done in the past. So we have a good amount of cash. If there is a market fall, we'll be buying opportunity.
The continuity of the current government and current policy doesn't seem to be still. The continuity looks to be an extremely high priority event, like 95, 97% types, or maybe even 99%. Good monsoon and good continuity of the political setup and the capex boom continuing, tax collection being good, I think we are in good for, again, next 12 months, and after that we'll see. Most of the people in the market, they should also get reconciled to 10-15% correction. And once that is there, you're reconciled to that and you buy the good stuff, high ROE, high growth at reasonable PE, you do well.
Yes, today it is fair to say that the market believes that there will be continuity. So, if something goes wrong with that hypothesis, will you get a deep correction? I think you will, right? But we've seen historically that if the underlying stocks that you own have fundamentals, they have earnings behind it, they have cash flows behind it, value will come back.
Okay, so those were the big voices on the markets. But with this, viewers, it's time to wrap this edition of Market Fatafat. It's a goodbye from me and Ankita and the entire team who put the show together. Thanks so much for tuning in. But don't go anywhere. Market action continues on ET Now, and closing trades will take the action ahead.
If you like this video, then like, share and subscribe to ET Now.